European stocks have outperformed their American counterparts so far this year, but which group will do better going forward? Welcome to Trading Nation. I'm Dominic Chu. Wald is a technical analyst with Oppenheimer. Eddy Elfenbein edits the Crossing Wall Street blog. So let's talk first of all, guys, and maybe Ari, we'll start with you in the charts first. What exactly are we looking at here? We've heard the case made that Europe represents a better value and a better investment process going forward versus what's happening in the U.S. The charts are playing out that way. Is that what you're seeing?
The charts actually suggest it's the other way around, that more important than valuation here is actually the secular momentum in the S&P 500. And I think this, using history as a guide, Europe has outperformed, at least over the last 6 months. And, you know, in our view, this is actually providing that opportunity to rotate the other way and get into the U.S. And specifically, the indicator that I brought with me today is looking at the 6-month rate of change, just speaking in terms of relative performance between the Europe 50, Stocks 50, and the S&P 500. Was at a level of 7% at the end of March. So Europe had outperformed by 7% versus the S&P 500 through that 6-month period. This was one of the most overbought conditions over the last 10 to 15 years, really since the year 2000. So using history as a guide, usually when you get those types of overbought conditions by Europe, it does tend to pay to rotate into the U.S. The U.S. has shown it can outperform both in a rising and falling market tape. There's secular momentum behind the S&P rally, not in the Europe rally. So it's actually more of an absolute call. It's not that we're bearish on Europe here. It's that we're more bullish on the S&P 500 and U.S. stocks.
It's certainly always a relative basis that we look at investments with, and that's interesting that you bring this up. So the outperformance that we've seen is going to top out if historical trends have played out, and that's the reason why you think that Europe, again, could be perhaps less in terms of a performer than the U.S. overall. And Eddy, I got to say, from your standpoint, do you see that same thing happening? Because there's been so much bullish commentary about what's happening with European stocks. A lot of money managers out there saying they represent the better value. I mean, what's the take here?
You know, I got to first I got to credit Ari. He got this trade exactly right over the summer. But right now, I'm willing to stick with the European stocks. You look at a lot of these blue chip European stocks, you're seeing yields of 3%, 4%. Just the relative valuation is the spread is much in their favor. You look back, you know, maybe the last 10 years, the stocks 50, that really hasn't done much at all compared to the S&P 500. American market has done so much better than the European markets. In fact, even if you go back 20 years, nearly 20 years, the stocks is flat for something like 19 years. I'm willing to stick with the European stocks. And I'm willing to see them run. This is maybe a 2 or 3 year time horizon, yeah. But I think that's a better value right now.
And I will say this. Hope Eddy is right. I am rooting for that we found it is very rare for Europe to outperform in a falling S&P 500 absolute tape. So generally a bet on Europe is a bet really on the U.S. and global equities as a whole. I think this is really the uber bullish scenario. Maybe a lot of people aren't talking about it. Europe continues to lead the way. S&P 500 is going much higher with it. Just from a risk-reward basis, we do have some preference for the S&P 500.
All right, so what? I'll give you the last word, Eddy. Is there anything that you would see, anything that might change your mind out there? Are there any developments? We know that there are macroeconomic catalysts coming up on the horizon, especially in places like France with regard to elections. Are there things that may change the thesis, or are there things investors and traders should be watching in the coming weeks?
Yeah, really, France is a major concern. We wouldn't want to see, as U.S. investors, having the extreme left going against the extreme right. But ultimately, I don't think that's a major long-term concern. I think with the European, we're seeing recovery in Europe. Right now, I think the odds are moving towards the European market, and I'm willing to stick with it.
All right, so Europe, it seems like, could be the better investment. Charts maybe playing out for the U.S. side of things. We'll see what happens for sure. Eddy Elfenbein, Wald, thank you so much for joining us. And that's Eddy and, of course, Ari on Trading Nation. And for more on Trading Nation, go to tradingnation.cnbc.com. Until next time, I'm Dominic Chu.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.